Hi guys, hi everyone. So we are here for buying property through self-managed superannuation funds webinar. If you're here for the different webinar, probably it's a different room or different link or whatever. So I will begin with my presentation. I will present on a self-managed superannuation fund, and then we have Louisa from Zippy Financials to present us about the lending and about the borrowing in a self-managed superannuation fund. And we will have the questions after the presentations. So hold on to your questions and ask us after the presentation. So, all right, let's begin. Obviously, I have to begin with a disclaimer that information provided in this webinar is a general information only, because we didn't consider your personal circumstances, objectives, and needs. And you need to contact your financial advisor if you want someone to consider your personal circumstances and provide you with the personal advice. Because I've got a license, I have to provide you with this disclosure. All right, so everyone is muted. So if you have questions, like I said, hold on until the end of the webinar. And at the end, you can send us via chat, your questions via chat, or you can raise your hand or even unmute yourself and ask the questions. Or you can send us questions after the webinar as well. All right, so first of all, it's my presentation. So my name is Natalia Clark. I'm a director of Easy Super. I've been doing self-managed superannuation funds for the last 20 years, and I'm SMSF specialist, SMSF expert, SMSF accountant, SMSF advisor, and SMSF auditor. Everything is SMSFs. The one thing I do not provide the investment advice. So I don't tell you which shares to buy, and I don't tell you where to invest, but I can assist you how to invest properly and how to stay compliant using the self-managed superannuation fund vehicle. As you can see, I won quite a few awards. It's just because I spend so much time educating myself, and I know everything about self-managed superannuation funds. It's a niche, but I love it. So I love helping people. All right, so what we do, like I mentioned, SMSF establishment, which is advice. It's covered under the license. No one can set up SMSF without statement of advice, without license. We do also accounting for self-managed superannuation fund, SMSF audits, and advice. It's just about us, so you understand, so I can see, I have experience, and I've seen a lot of clients as an auditor, as an advisor, or as an accountant. All right, let's start from the beginning, from the basics of superannuation in Australia. In Australia, superannuation system consists of the following funds, superannuation funds. We have industry superannuation funds, we have corporate funds, which obviously are attached to the corporations and established for their employees. We have public sector funds, we have retail funds, and also we have self-managed superannuation funds. So this is a superannuation system. I have a question about recording. Yes, everything is going to be recorded, and we're going to email you the recording. So if you missed anything, so don't worry about it. All right, what is a self-managed superannuation fund? So I'm not going to talk about all other types of funds in Australia. The superannuation rules, they are the same across any superannuation fund regulated in Australia. However, today we are going to talk specifically about self-managed superannuation funds. Let me just move to the next one. All right, what is a self-managed superannuation fund? Superannuation fund is a trust. It's a special superannuation fund. It's a trust. It's different from the family trust. And in the self-managed superannuation fund, the trustees, they are also the beneficiaries of the trust, and they're members of the trust. So it's like a 3-in-1. And because it's a trust, it has to have a trustee. And trustee could be a corporate trustee, which is a corporation, Pty Ltd, or it could be the individual trustees. For the individual trustees, it has to be at least 2 individual trustees to be the trustees for the Self-Managed Superannuation Fund. SMSF used to have up to 4 members. Now SMSF can have up to 6 members. I haven't seen a lot of SMSFs with 6 members, only because I think it's quite complicated in terms of managing, especially if it's intergenerational superannuation funds. Say you have mom, dad, children, then the investment strategies could be quite different for different generations, which is why most superannuation funds, they have mom and dad in self-managed superannuation funds. So most SMSFs would have 1 or 2 members. And like I said, in SMSF, it could be mom and dad, and they can employ each other. However, the rule is that employer and employee could not be in one SMSF unless they're relatives. However, if it's mom and dad, they can employ each other, or if they're relatives, they can employ each other. So, but not employer and employee, so in one SMSF. All right, why people want the self-managed superannuation fund? So we do establish a lot of SMSFs, and every single client who comes to us, they say, and I ask them, why do you want to set up SMSF? Because this is the question I always ask. They say, because we want to control, because we want to invest in certain asset classes, because we can't invest in these asset classes outside of SMSF. We can't use our super and tell our superannuation fund where we want to invest or which assets we want to buy. So these are the reasons why people come and want to set up self-managed superannuation fund. Mostly control, choice of investments, opportunity to invest in property, because there is no way you can invest in property in industry or retail superannuation fund. You can invest in units in the property fund or whatever, but physically you cannot own the particular property. So, and this is why people are attracted to the self-managed superannuation fund structure. So, and also, of course, you know, like self-managed superannuation fund, one of the main attraction in terms of the tax planning is lowest tax in Australia, because we all pay taxes, and any other entity in Australia would pay higher tax than self-managed superannuation fund. So in SMSF, you pay maximum 15% tax. So we talk about taxes a little bit later on, but yeah, it's this is what attracts a self-managed superannuation fund as a structure for people. All right, so when you're thinking about self-managed superannuation fund, you have to think of the reasons why SMSF is not a good idea might be not a good idea for you, because SMSF is not for everyone. So there are a lot of people who calling me and saying, oh, I've got 50,000 in my superannuation fund. Can I set up SMSF? And the answer is, in the law, there is nothing what prevents you to set up a self-managed superannuation fund, but ASIC recommends to have at least 200,000 in a self-managed superannuation, so in superannuation to set up a self-managed superannuation fund. And the reason is because if you have less than 200,000, or I would say at least 170, SMSF could be not cost effective, because you're paying establishment fees, SMSF establishment fees, which are quite high. You're paying annual compliance fees, because SMSF, because it's a structure, it has to lodge tax return, have to be prepared financials, and it has to be audited. It's SMSF tax return. It's not a self-assessed tax returns. It's not like your individual tax return. You just put the numbers in online form and you send it to ETO, it has to be audited by the independent auditor. So the auditor will check everything in SMSF. So of course it brings the cost up, not down. So, and this is why we recommend to have at least 200,000 to consider SMSF. But like I said, the most probably, the minimum probably would be around 170. However, if you have funds available outside of self-managed superannuation, outside of your superannuation, self-managed superannuation fund, or just your superannuation in general, you can always bring it inside of superannuation, considering the contribution strategies available. There are quite a few contribution strategies available to bring the money inside of a superannuation system. SMSFs and superannuation in general they have a little bit of rules, because it's ruled not only by the general like Tax Act rules, but also by CIS Act, which is for superannuation purposes. The rules are quite complicated, and this is one reason why a lot of people are scared about self-managed superannuation fund, because they don't understand how the system works, how the structure works and operates. However, if you have the right advisor, if you have the right accountant, then they will take care of all the technical issues with self-managed superannuation funds. So SMSF could be more expensive to run, and again, it depends on your balance, because in your current superannuation fund, say you are in the industry or retail superannuation fund, there are two types of fees you're paying. The first type of fees, they are administration fees. Administration fees are usually low. And the second type of fees you're paying, it's investment fees. And investment fees, they are based on your balance. So because it's a percentage of the balance. Admin fees are fixed, quite low, could be even like $60, $70 a year. However, investment fees, they are percentage of your balance. And obviously, if your balance, when your balance goes up, your investment fees go up as well. According to research from University of Adelaide, the fees for running your SMSF become approximately the same as the fees which you are paying in the industry or retail superannuation fund, at the level of 250, 300,000. So, however, of course, different super funds charge different fees. It's just a general statistic research, but this is around 250, 300,000, where you pay same fees. You'll be paying same fees in the SMSF and in the industry fund. And then above 300,000, obviously you'll be paying more in the industry or retail superannuation fund. Again, it's not always, it depends. Some super funds charge less, some super funds charge more, but this is just the research based on statistics. All right, time consuming to manage. If you think about money in your superannuation in the industry or retail superannuation fund, it's set and forget. You receive your statement once a year or twice a year, usually once a year, and this is it. So the only job you have to do is when you join the superannuation fund, you pick your risk profile, and once a year you might change again based on your risk profile. You might change your investment allocation, but apart from that, it's set and forget. In SMSF, you are actually in the driver's seat, so you decide where to invest, and it's exciting. But at the same time, if you are not, if you're not ready to educate yourself, if you're not ready to spend some time doing your paperwork and looking for investments, then it might be not for you. All right, financial knowledge, again, in the self-managed superannuation fund, when you invest in, you need to understand the investment basics, at least basics of investment. You need to understand in order to make a decision how to invest your superannuation. You can always hire a professional, of course, to help you. However, you can't rely on a professional for everything. At some stage, you will need to learn about the investments and understand self-managed superannuation funds rules. It's not hard. Again, like I said, if you had the right advisor who can guide you and assist you, but you need to be prepared to learn. All right, investment losses to accept. Obviously, if you invest yourself and you lose, it's your loss. So no one is going to recover. There is no insurance. There is no protection. Trustees' responsibilities. As a trustee for self-managed superannuation fund, you'll be responsible for running your SMSF, and there are penalties for breaching the SIS Act again. And this is, I'm coming back to importance of the right advisor, right accountant. All right, so there's SMSF, self-managed superannuation funds. They are governed by SIS Act, like I said, it's Superannuation Industry Supervision Act, 1993. Superannuation Industry Supervision Regulations, 1994. Or also Income Tax Assessment Act, which is for any entity in Australia. This is the act which we all follow, the income tax. SMSF Trust Deed, it's like SMSF Trust Deed is it's a Bible for the self-managed superannuation fund. And when you set up SMSF, every SMSF will have a trust deed and SMSF investment strategy. And SMSF investment strategy, this is something where when you set up SMSF, trustee has to formulate the investment strategy, again, with the help and assistance of the professional. Don't be scared of all these rules, because like I said, if you are in the right hands, it's all manageable. All right, but let's talk about exciting things in a self-managed superannuation fund. And most exciting thing, I think one of the most exciting thing, it's a tax. How much tax you pay? You pay maximum 15% tax in SMSF. If you buy the assets, say you buy property and you hold it for 12 months, for at least 12 months, and sell it after you hold it for 12 months, you pay only 10% capital gain tax, which is very exciting, because compared to capital gain tax in your own hands, say if you hold the asset, if you buy property, hold it and sell it in your individual hands, individually, so you probably will be paying, and obviously if you make a capital gain, you'll be paying more tax. And zero, your tax might become zero and will become zero when you reach the retirement age. A retirement age for the self-managed superannuation fund is you have to reach at least the age of 60. 60 or 65, there are certain conditions you have to meet at 60, but at 65, you don't need to meet any conditions. So it means at 65, your tax in a self-managed superannuation fund will definitely become zero. And it means if you buy, say you buy property, you hold it until you're 60 or 65 and sell it after you reach this age, the retirement age for SIS Act, for superannuation purposes, you will be paying zero tax on capital gain. And also the income which you receive from this property, say if you don't sell the property, say if you keep it in a self-managed superannuation fund, you'll be paying zero tax as well on the income. So just as a general, there are like rules around it, but just remember 15% tax maximum, 0% tax when you get a little bit older. All right, so what can you buy in a self-managed superannuation fund? Obviously, the main purpose of superannuation is to provide the benefits for your retirement. So it means you cannot enjoy superannuation before your retirement. You cannot spend money on anything which you can use before your retirement. So the only thing you can do with your super is invest to invest it in the assets which hopefully will bring you decent income, or you will make money for your retirement. And only after you retire, you can access this money. So these rules are the same across all superannuation funds, all regulated superannuation funds in Australia. So until you retire, and retirement, like I mentioned in the previous slide, it's when you reach the age of 65 or you reach the age of 60 and retire. Retire, I mean, quit your employment. You have to quit your employment and say, that's it, I'm not going to work again. It doesn't mean that you cannot start working again later on. However, you have to stop your employment at 60, between 60 and 65. Once you reach 65, you don't have to stop your employment. You can keep working. And this is when you can access your super. And this is when you can enjoy zero tax environment. Right. So what you can buy? You can buy property, commercial, residential. You can buy shares. You can buy shares in listed companies, unlisted companies, unit trusts, managed funds in Australia or overseas. If you want to buy Facebook shares, for example, you can definitely do it. Precious metals, say gold, silver, cryptocurrency. Some collectibles. Collectibles rules are very complicated. However, it is an option. Managed funds, like I said, of course, cash, term deposits. So there are almost the same options you have outside of superannuation environment. If you want to invest, if you think, where would I invest my money? Mortgages as well, loans. So almost anything you can think of, you can do in a self-managed superannuation fund. So however, you have to remember one of my main rules: whatever you buy with super money, whatever you invest into, it has to be under the self-managed superannuation fund's name. So what it means, you invest in property, it has to be under SMSF's name, which is on the title. You open a term deposit, say you want to invest conservatively, again, you have to open term deposit under SMSF name. So one of the main rules, everything is under SMSF name, and you cannot mix your money, your personal money, your company's money with SMSF money. Everything has to stay separate. Separate bank account, separate account for trading. Shares, for example, separate. Property, so under SMSF name, everything separate. All right, let's talk about SMSF establishment process, because one of the main questions when people call us, they're asking, okay, how long does it take? It's a process. Like I said, no one can set up SMSF without providing advice, because SMSF is not for everyone, and it could not be a right option in your particular circumstances. So with a statement of advice, you can set up SMSF after the statement of advice is done. In the statement of advice, we look at your particular circumstances, objectives, and needs. What it means, we look at your assets, we look at your liabilities, we look at how much money you're making, we look at what insurances you have, we look at how much you're paying in your current superannuation funds, we look at how much you put in your super, you'll be putting more, or we look at, for example, if you want to borrow and buy property, we look at the cash flow for the borrowing and for the property. So we look at the whole scenario around self-managed superannuation fund. And we provide you with the document, which is called Statement of Advice. And in the Statement of Advice, we provide all our recommendations for you, not only for SMSF establishment, but also for the strategies, for the property, for the contributions, for the pensions, if you're a little bit older, like I said. So first, the statement of advice. The second is SMSF establishment. It's establishment of the trust itself with the corporate trustee. I personally recommend to set up SMSF with the corporate trustee. There are reasons why we don't like setting up SMSF with the individual trustees, because with a corporate trustee, you have a better asset protection, you have a clear asset distinction. So it's an asset which belong to the super fund, because it's got this ABC Pty Ltd name on it. We also apply for, we look after all the technical part of SMSF establishment, and we apply for ABN, TFN, electronic service address. We help you with a rollover from your current superannuation fund, rollover of your superannuation to the SMSF. After the SMSF is established and appears on superannuation lookup as a regulated superannuation fund, it has to appear on the superannuation lookup. You can open a bank account. This is your job. You will have to go and open a bank account under SMSF name. And you go to any bank of your choice. If bank doesn't offer SMSF account option, then obviously it's some small banks, they don't offer SMSF account option. Obviously go to different bank. Then after you open SMSF account under SMSF name, we assist you with a rollover. So rollover takes 3 business days usually. And after you have money in SMSF's bank account, this is when you can start investing your superannuation. And again, everything has to be under SMSF name when you invest. So this process takes approximately between 3 and 5 weeks. It's not a shortcut. It's not 2 days, like job. It's a process. And during that process, we spend a lot of time educating you about what you can do and what you cannot do in a self-managed superannuation fund, which is very important because I don't want my clients to breach any laws. I can deal with any breaches, but I don't want to deal with my clients' breaches. I deal with other accountants' breaches enough. So, all right. So, why statement of advice is required? This is one of the questions I've been asked a lot, because statement of advice is an expensive part of SMSF establishment process. And statement of advice fees are 4,000 plus GST. And why it's required? Because of these reasons. First of all, SMSF is a financial product. So whoever provides you advice on a self-managed superannuation fund, they have to be licensed, and they have to provide you statement of advice. They can't set up SMSF without statement of advice. They can't talk about SMSF without statement of advice. So best interest duty. So we want to make sure that SMSF is in your best interest. People lost a lot of money in the past because someone set up SMSF without considering the best duty. We spend a lot of time with a client, so we spend a lot of time educating again about what you can do, what you cannot do, and how to do things correctly in the self-managed superannuation fund. And without this guidance, it's very easy to make mistakes, miss the opportunities as well. Personal circumstances, again, we consider optimize contributions, minimize tax. There are opportunities out there, not for everyone, but for a lot of people. Cash flow, we look at your cash flow for property and borrowing. For example, if you're interested in property, we look at your insurances. We don't want you to lose insurance and be uninsured. So that's one of most, I guess, biggest nightmare. Myself as an accountant and advisor. So if my client loses the insurance and God forbid something happens to them, imagine fees. We look at the fees which you're paying currently and which you'll be paying in a self-managed superannuation fund. So we basically give you the full picture of your superannuation, and I guess it's a roadmap of what you're doing for the next few years as well. All right, so like I mentioned, the SMSF establishment of physical trust, we do company incorporation, we do ABN, TFN, electronic service address, ETO approval of regulation status. So all these boxes, they need to be ticked before you can set up a bank account for self-managed superannuation fund. Let's talk about property, closer to the topic of our webinar today. When we talk about property, in a self-managed superannuation fund. Of course, there are different types of properties, and this is what you can buy. You can buy commercial property in SMSF, you can buy residential property, you can buy land, you can buy Airbnb, you can buy different type of properties, whatever you might think of in the self-managed superannuation fund. However, there is what's important is the way how you buy, because obviously if you have enough cash in the superannuation and you set up SMSF and go and buy property up front with your superannuation money, happy days. You can buy anything and everything as long as it's under self-managed superannuation fund name. However, if you don't have enough cash up front, which most people don't, because land and properties are very expensive in Australia. If you have 200,000, 300,000, 400,000, 500,000, and very often it's not enough. So then we look at the borrowing. And the borrowing will be covered by Louisa in the next part of our webinar. However, I want to touch on another question is what you can do with the property in a self-managed superannuation fund. Obviously, if you buy the property up front with the cash, you can do almost whatever you want. You can do property development, you can do subdivision, only if there is no borrowing, if you bought it with the cash. And if you have enough cash in SMSF to do all this property development, subdivision, granny flat, yeah. So there is an option to be to basically go say into joint venture partnership with individuals. However, you still, in order to do all these things, you have to own the land, the property upfront with SMSF money. You can rent property to the unrelated party. For example, if you buy the property, doesn't matter if you bought the property upfront or if you borrowed with the bank to buy property. So you can rent the property to unrelated party, residential or commercial. With the commercial property, you can rent it to the related party, but it's only for commercial. It's called business real property. So if you have a shop and you're running your business from the shop, your SMSF can buy this shop, buy this building, and rent it out, lease it to your business. It has to be done at, there are rules, multiple rules, but main rule to remember, it has to be done at arm's length. It means market value for the rent, but this is possible in self-managed superannuation fund. One thing to remember with the residential property, again, doesn't matter if you're buying it up front, if you're buying it with someone, if you're buying it via limited recourse borrowing arrangement, this is called LRBA. And this is abbreviation for limited recourse borrowing arrangement. You cannot live in it. Your relatives or related to you cannot live in it. Even your partner, business partners cannot live in it. So just remember, just rent it out. Residential property, if you buy residential property, rent it out to unrelated party and sleep at night. All right. So again, this is about us. We do superannuation only. We don't do anything else. We do one thing, we do it really, really well, and this is self-managed superannuation funds. And this is offer. This is my offer for tonight and for the next 30 days. It's SMSF establishment. This is a total fees for SMSF establishment, including statement of advice. It has to be paid upfront, but you can reimburse yourself from the SMSF once it's established. So once you have money in a SMSF bank account, this is where you can reimburse yourself. Just transfer 7,700 from SMSF bank account to yourself after establishment. And today we are giving you a discount of 1,500. It's a general discount for next 30 days. So you just have to mention this webinar and we will set up SMSF for you for 6,200. And this is only valid for 30 days. At least you have to start the process in the next 30 days. and this is our offer for from Easy Super for tonight. All right, and now I'm moving to Zippy Financials and Louisa.
Thank you, Natalia. Hi, everybody. I am conscious of time. We're 42 minutes in, so we're a little bit over already. So I'll speed up mine as much as possible for you. But just to introduce myself, so my business is Zippy Financial. Tracy is always on. Tracy can give everybody a wave. She's my right-hand lady. We've got 6 credit managers that sit doing SMSF all day, every day. So these are quite easy to us. It's, nothing too difficult. They use, there is a lot of compliance around these sort of mortgages, but, there's generally a lot of compliance on a regular mortgage these days. So nothing too difficult. We've won Australia Brokerage of the Year the last 4 years, and just won 2 weeks ago New South Wales Broker of the Year for 4 years, as well as customer service. So it's an all-girl team, spread across different states and things, but we like to think we know what we're doing. My background, I was 30 years working for NAB. I was European Operations Manager for NAB. I sat at board level for NAB, running 4 banks over in Europe. So, and most of the girls that work in my business, Tracy's been a broker for 30 years. We're all ex-bankers and all very experienced. Okay, so self-managed super fund lending. So it basically allows you to use your super fund to purchase property. Obviously, we're only doing property. And ideally, the banks do want you to have that number that Natalia was talking about, the 200,000. We have got some lenders that will do under the 200, but we really need to, dig in deep and look at your figures and make sure that it is worth your while with the fees and charges and everything that's involved in a self-managed super. We can't give you advice on it. We're only going to do the lending. So you've got to go and see financial planner, SMSF advisor, and your accountant. So we're happy to run numbers, and then you go off and get the advice, or you can do it the other way around, go and speak to your accountant and then come to us. But we're happy to run numbers at any time. Just to mention, the SMSF cannot be on the title of the property. The purchase is done through the Bear Trust that is set up for you. The SMSF Property Trust, which is again the Bear Trust, also needs to be set up. Natalia sort of touched on that. I won't go on any more about that. But that involves a separate corporate trustee, and that entity is noted on the purchase of the property. Sounds very complicated, all of that, but honestly it isn't. And you're working with professionals that do it day in, day out. We're going to be holding your hand, guiding you through it. We're going to be telling you the next steps. So don't be frightened of SMSF. I did it myself over in the UK. And I've made a lot of money through it as well. It's worked for me. But most mortgage brokers have SMSF. We love SMSFs. The tax is very exciting on an SMSF. So points to know, the lending must be for investment purposes. So you can't buy an owner-occupied house. We do have people coming and asking us that. There are rules when you retire that it can become an owner-occupied property, but it has to be for investment purposes. The only exception is when you're buying a business, a commercial property, for your business, for business use, and Natalia touched on this as well. So you can buy the commercial property, but the rent has got to be at market rate. So if anybody's interested in commercial property, happy to talk that through with you. You can't use equity. Oh, just nip back. You can't use equity in one property to purchase another property. Each property's got to be standalone. So that's really important to note. Again, not all lenders offer SMSF. A lot of lenders pulled out of it. They were classing it as too high risk. There was a lot of bad press around SMSF, or like, I don't know, 10 years ago or something, because a lot of people weren't getting the best advice, and that's why they've introduced licenses and all the rest of it. And a lot of people going into SMSF that shouldn't have been in SMSF, you know. So this is where this 200 figures come around, you know, because it's got to be worth your while. There are a lot of annual running fees, you know, running costs involved, and fees and charges. Talia sort of touched on that as well. But yeah, you got to go and find the right people and build the right team around you. That would be one of my main points tonight. And that's why I got Natalia. I got in touch with Natalia because she is award-winning, and everybody knows Natalia in our industry. So that's why I'm really keen that my clients know who Natalia is as well. Servicing in self-managed super fund loans is very different to a normal mortgage. So if we have run your figures for a mortgage, it's not going to be anything like what we gave you on that. So it is very different. The servicing in an SMSF loan is lower than a normal loan. And an SMSF loan interest rates are obviously higher than normal mortgages as well. You know, I have put a 6.99 rate there at 60 LVR, but as the loan to value ratios go up, the interest rates will go up as well. And a lot of the lenders like to do around 80 LVR. We have got a couple that do 90 LVR. But, you know, I said there's not that many lenders around. We've got 60 banks for our normal lending, and only 9 of them do the self-managed super fund. Also to note, no redraws available on SMSF loans. So the SMSF loan to value ratios are lower than normal loans. Obviously, you can get 95% LVR on a normal loan. But we're not going to get that high on an SMSF. They don't do construction loans. There's no cross-collateralization of properties in self-managed super fund either. The properties have got to stand alone. We've got a few lenders that will still do offset accounts with the self-managed super funds. Majority of them don't, but we have got some that do if that's a requirement. There are liquidity requirements for self-managed super fund post-settlement with lenders, and they all vary. But most lenders like you to have something left, some sort of figure left in the super after you've done the property purchase. Fees are more expensive. You know, you've got the bank setup fees, trust vetting fees, solicitors fees, application fees. The lender's fees all vary. You will find a lot of mortgage brokers do charge for self-managed super fund as well. We don't. We don't need to. We used to when we were much smaller and we didn't have all the staff, but now we actually do. We do these for free for people. There's no extra fees and charges, unless it's something really complex and complicated, but it's not usually the case. Some lenders require financial legal advice documents to be signed off as well by your accountant, financial planner and solicitors. But again, as a broker, we're holding your hand through all of this. We're going to tell you when you need, who you need to go and speak to, when you need to go and speak to them, and what you need to get signed. We help with all of that. The servicing, SMS loans are serviced using, you know, various income sources. We've got PAYG, and we've got self-employed. So we're sending this out to you. I'll skip this slide, and I'll just because of time, and you can have a read through that when you get the presentation. Natalia again touched on this, I think, earlier, but if you do need additional funds, if additional funds are needed to service the loan as well, such as salary sacrifice or additional voluntary contributions, your servicing will be done outside of the fund, including the salary sacrifice and additional contributions as a liability repayment to confirm that the extra funds required to service the SMSF services as a commitment outside the SMSF loan. I'll read that slide because it's a lot to say, but basically, if we're going to look, if you do need the additional funds, we are going to have to look outside the super for servicing, which means we then start treating it like a normal loan on the assessment. So we're going to start asking you to then start filling fact finds, give us your liabilities. We're going to look at all the usual things that we look at. We're looking at a normal mortgage, so we're looking at your living expenses and everything very closely as well. So there's nothing too complicated on the lending side. Natalia's bit, the advice bit, and understanding self-managed supers, the really important bit. But I think we'll go to questions, because there was some questions in there, Natalia, if you want to start working your way through those.
Yeah, so there are questions in the chat, so you can put them in the chat box. So basically, yeah, we will email all the recordings. So are we allowed to have multiple superannuation structures? Yes, you can have multiple SMSFs. You can have accounts in the different superannuation funds. The question is, why would you do that? Because you'll be paying fees everywhere. But yes, you can. You can have as many SMSFs or other superannuation funds as you want. So what are the rules of transferring cryptocurrency to SMSF? Look, it's a completely different question. You cannot do it. So my short answer. Can we pay for the SOA from our super balance? Yes, this is what you can do. You can reimburse this money to yourself after SMSF establishment. Or if you don't need money, you don't need to reimburse it to yourself. We'll just put it as a contribution from yourself. Can one buy land using SMSF and then build on it using your own money, or transferring the maximum amount annually to finance the constructions? Natalia, if you're buying the land, like I said, with your own with SMSF money, with superannuation money, and yeah, you can build, subdivide, and do other things with SMSF money, or with your own money. But again, you need to consider, for example, different structures like a unit trust, or joint venture or partnership. So it's more complicated arrangement. But yes, it is possible. Julie, is it important to buy a positive cash flow property in your SMSF? From SMSF point of view, from compliance point of view, no, it doesn't matter. From cash flow point of view and bank's point of view, probably Louisa will say, I guess it's more desirable for the lender. But from the SIS point of view, from legislation point of view, no, you can buy negatively geared property as long as you can service the loan. Yeah, what would you say, Louisa? From the lender's point of view, do they?
Tracy, I'm going to let because Tracy's going to answer one or two questions as well.
Yeah, from the lender's point of view, they're going to want to look at probably a positively cash flow property or a positively cash flowed super fund. So the idea from a lender's perspective is that you're buying a super fund because you want to create wealth. So it's more about creating wealth in the super fund than negatively gearing from a tax perspective.
Yeah. Yeah, that's yeah. So using DeFi apps, can you take a loan against the crypto tokens that you own in SMSF? No, you can't. SMSF, okay, the general rule, SMSFs are not allowed to borrow. And also you cannot lend to yourself from SMSF. So SMSFs only allowed to borrow using limited recourse borrowing arrangement structure. And in terms of the loan, SMSF can provide a loan to unrelated party. However, with related party, if it's a related party, if it's a member, no. If it's a related party, say related company, only up to 5%. So if you're looking at borrowing and using the DeFi, no, you're going to, yeah, you know, like you're moving to the wrong direction, because you definitely will breach SIS regulation and SIS Act by doing so. Yeah. All right. So any other questions? Seems to be.
That's it.
No.
We've done well there. We've wrapped that up in 55 minutes for everybody.
Yeah.
So thank you everybody for joining us tonight. We will get the presentation and the recording off to you as soon as possible. And if you've any questions, obviously, feel free just to message through to Natalia at Easy Super or through to myself at Zippy Financial. We'll answer your questions gladly. And obviously, any advice or anything else, feel free to contact us. So thank you very much and enjoy the rest of your evening. Thank you.
Thank you, guys. Thank you.
Thank you.
Bye.